Today we talk about the share price of Ocugen and whether or not you should be investing in the company. Now at first glance we see three major spikes in the share price, indicating that Ocugen has had some amazing breakthrough and might be sitting on some valuable technology. However, there are some serious caveats to these spikes, and when you combine these with some of the recent developments, things might be more risky than they seem. So let me know in the comment section what your thoughts on Ocugen are. Now let's dive right in. The first red flag to the Ocugen stock. One of the first major indicators that something doesn't add up at Ocugen is in the selling of the stock by the executives and board members. Now, I will totally accept that the sale of stock by an insider doesn't always mean that there is something wrong with the company, since individuals can have many reasons for selling stock, such as rebalancing their portfolios, covering business or personal liabilities, and of course the classic reason, a good old-fashioned divorce. Now, with that said, I highly doubt that all of these executives and board members are going through a divorce at the same time, but they are all selling off their stock as fast as they possibly can, and some of these sales are very badly timed. Before Ocugen announced the Bara deal, the stock was trading at around $2, and after the announcement, Ocugen stock shot up to almost $19 in just 3 days. This is an insane valuation and has nothing to do with the actual value of the company, because not even the executives at Ocugen believe that the stock should be valued at $19, and they proved this with their $23 million direct offering to institutional investors. In order to understand Ocugen's thinking, you have to realize that any investment deal that involves a direct offering is not completed in just 5 minutes. You are dealing with banks and/or investment companies, legal teams, and maybe even shareholder voting before you can complete this. So this means that when Ocugen announced on the 7th of February that it had entered into a definitive agreement to sell $23 million worth of stock at $7.65 per share, that they were negotiating this well before the 7th of February. Combine this with the Bara deal announced on the 2nd of February, and you see that it's obviously not a coincidence, but a well-planned strategy for raising money on the announcement of the Bara deal. Now, of course, there is nothing wrong with raising money when announcing your own company's success, but if you were expecting a share valuation of around $19, would you really sell your shares at $7.65? No, of course you wouldn't. You would sell them at a minimum of $15 or even more if you are truly expecting $19. And remember, they were selling them at a premium, which means that when they agreed upon the price, the actual share price was not even at $7.65, but most likely at around $5 or $6. Before we continue with a realistic price prediction, please like and subscribe to the channel for more finance and banking information. So after seeing the share price explode, the company immediately wanted to raise even more money by greatly expanding the number of outstanding authorized common shares, which was announced on the 22nd of February and voted on the 16th of March. After this, the share price fell as expected from around $9 all the way down to around $5.50, realizing a 40% decline in just 30 days. And this is a much more realistic price, maybe even a little high if you ask me. Now at this point, Ocugen has raised over $20 million worth of shares, diluted the share price, and is ramping up to sell even more shares worth a total of $100 million, all based on the Bara deal. So this brings us to the second major red flag in the Ocugen's business model and share valuation, and that is the actual benefits of the Bara deal. Because by looking at all the hype, you would think that it's an amazing deal that will generate huge revenues, but that's not really what's going on here. First of all, the deal clearly states that Ocugen will receive only 45% of the profits, which makes it very important to know the actual profit margin on the product, and at this point that's still very unclear. Next to this, it's also unclear if these profits only include the cost of production or if they also tag on expenses associated with researching, producing, testing, etc. So basically, how does Bara define what profits are? Are we talking operating margin or net profits? Because this will matter a lot. So after figuring out how much of the revenue you actually get, you also have to realize that in this particular case, with this particular product, you're not only too late to the party, but you're also going up against two giants in the industry. Because Pfizer and Moderna have not only provided millions of doses already, they've also proven to be the most reliable products worldwide, while other manufacturers have had several problems ranging from serious complications to laboratories being shut down for safety violations. The US government is currently sitting on a huge supply from other manufacturers that it's not even using because of these safety concerns. They've even given away some of these to Canada and Mexico, which shows that they are fully committed to using Pfizer and Moderna. So even if you come out with a product that is much cheaper, why would the US government take on that risk, since the alternatives were also cheaper and had several problems? This won't give you an advantage, and you would have to come out with a superior product, which Ocugen also doesn't have. And when you add all of this up, you really start to wonder, why are people expecting so much from this deal? Next to this, the US has also secured millions of doses for next year, making it even more difficult for a new partner to get any contracts, Now we could go on and on about the multiple holes in the business model of Ocugen, but the important thing to focus on for now is whether or not you should buy or sell the stock. Well, the answer to that is quite simple. You see, the way the share price reacts to good news makes it obvious that there's going to be another huge spike in the near future, and this is most likely going to come from getting the emergency use authorization from the FDA, which will send the stock sky high again. However, just like during the second spike that happened in April, many of the executives will most likely execute their stock options and dump a lot of shares on the market. So if you are currently holding any Ocugen stock, I would be on the edge of my seat looking for that emergency use authorization and then immediately sell when it peaks in a couple days after. If you're thinking about investing in Ocugen, be very careful, because if you miss the pump and dump, you could be holding the bag for a long time, since the current fair market value for the company is around $3 to $5, and everything above that is just the expectations of the possible revenue from the Bara deal. Now, I'm not saying that Ocugen can't consistently trade at around $25 for instance, or beyond that. It's just unlikely that it's going to do that with the results of the Bara deal. It needs the other therapies to mature and start bringing those products to market. This will take another 1 to 2 years, so ideally you want to wait after the spike and fall of the stock and then buy up the shares at a much better price. Obviously, if the shares fall to around $6 to $5 before the good news comes out, you could take the risk and bank a quick profit. This was the Ocugen stock analysis. Please like and subscribe to the channel for more finance and banking information.